shall we start the lesson again, which we stopped last week. So we talked about the regulatory models. Last presentations, at the final stage, we talked about the regulatory models. So perhaps you could remember that. One thing we have discussed, am I correct? Basic, all right, we have stopped this point, rule-based basic approach to regulations, right? Hello? Right, okay, we'll discuss this one also. Right. So we discuss yes, regulation, regulatory models. Lastly, so there are two types of regulatory models. One is rule-based approach. Second one is principle-based approach. Rule-based mean, as I mentioned you earlier, so typically based on the rules. So banks and financial institutions are required to adhere to the rules issued by the regulator. Rules issued by the regulator. Now remember that. So the legislation, particular legislations, the rules are based on the legislations. Particular legislations or regulation, they prescribe that explain what the firm must do and what the firm must not do. Right? Under this regulatory purview, rule-based approach, they will explain it. So that means bank or the financial institution, they should be very careful on to understand what the regulation is, right? What it says. Now see, so if it is a violation of the rules, mean if regulator come and supervise and check whether you have done in proper way, they will check whether you are in line with the regulatory purview. So that means in line with the regulations, right? That's what that's indicate that the regulations set out what are the firm's obligation toward the clients and shareholders. Basically, when we are talking here, when we are talking the regulations, we are talking about the banking sector, because banking sector, as I mentioned last time, widest sector in the Sri Lankan financial market, more than 62% of the financial market share of the banking sector. So we are usually focusing the banking sector activities, right? So in that sense, regulations are more important for the banking sector. Why? Most of the customer base are dependent on the banking sector. That's what the rule-based approach most important. But by looking at those kind of things, right, country like ours, so we are always focusing the rules, right? Interpretation of the rules. If you look at the judicial system in our country as well, right, lawyers tend to interpret the law, rules and regulations, right? Not the principles. That's the difference, right? Country like us, that's what the regulator says. What the regulator says, based on that, they will take the actions, right? So in case of principle-based approach, the regulator will give the principle for you, right? The principles mean, right? Principles mean the core of the particular regulations. Core. This is up to the banks or financial sector to, right, prepare their own set of approach, because principle is there. Now, if you look at the developed market, developed financial market, Europe, especially in the European market, EU market, you know that EU market is a one market now, right after the Union of the Economic, right, Euro countries. Now they are having the same policy each and every country. Same policy. Same policy means Their economic policies, their trade policies, their tariff policies, and their banking policies are similar to each other because their policies are based on the principles. That's what we are talking about the Economic Union, European Union. But under this rule base, especially say that, right, what the banking institution should do, what the banking institution should not do, right? Then you have to very clearly identify what you have to do, what you should not do. That's what the difference. If you go to the principle-based approach, they are not talking about the much rules, right? They are not talking about the much rules, right? That's a firm interpretations, firm interpretation of the rules or principles, firm interpretation of the rules and principles. So principle may be broadly worded as a firm must observe proper standards of market conduct. That's the one. That's a good example for, right, principle-based approach. Right, regulator can say a firm must observe proper standards of the market conduct. Market conduct. That's a broad. That's the principle given by the regulator. That's a principle given by the regulator. Now, it's up to the particular financial institution to set up the standards in the market. Set up the standards in the market, not by the regulator, right? This is the one expected from the regulator, but relevant standard must be developed by the particular institution or particular sector altogether. That's what the expectations, right? But now, basically in our history, we have seen that rule-based approach are more popular than the principle-based country like ours. But now, we are gradually moving toward this principle-based approach. Why? If you put up the rules, right? If you put up the rules, they may not be 100% correct. Why I am saying so that? Now, rules can be interpreted in different way by the different people, and especially in if it is a go to the court level, right? You know, the regulator intention may not be there. Otherwise, intention of the regulator, right, might be, right, interpreted in different way. Different way. That's what. Sometimes regulator might be wrong in that argument, right? Even, you know, the regulator done it in a good faith. Sometimes financial institutions or, right, financial institutions, the court can be argued that that is not the way to, right, that is not the way to interpret it or given the regulations. That's what the principle-based approach is more popular, because principle is given. A firm must observe the proper standards of the market. That's a broad, that's the principle. Then particular sector, particular market players, they should come up with what are the standards for market. Now see, foreign exchange market. That's a good example in nowadays. So what should be the kind of standard to be practiced in this market right now, considering the today's scenario, right? Now we are talking about the undercutting of the rates, right? In a good, in a principle-based approach, can the bank or can the people do such a things? No, they are not required to do it. That's the ethical issue. That's the ethical issue, right? That's the ethical issue. Now see, almost take a simple example. Almost all the banking rates are similar to each other. Why? right? In our country, there are central bank regulation directions on that. In a principle base, banks will come to, right, conclusions, okay, maintain this type of interest rate. That's what if you look at the developed countries, interest rates are not strictly monitored by the central bankers of that countries, because banks are allowed to determine their own rate, but individual bank cannot determine it. Why? The huge competition of this particular market, right? You can't undercut the market rate. And sometimes if you look at the Japanese market right now, the banking interest rate is zero, almost zero, right? Almost zero. So what those banks can do with the money? Savings of the people. Even the regulatory action can be fruitful on that. Yes, even though there is no interest rate paid to the customers, depositors, but proper discipline should be in the market. Proper discipline should be the market. That's what the Bank of Japan will provide principle-based approach on some aspect and rule-based approach to some aspect. That's what, right? But ours also, in a Sri Lankan context and Indian context, we are basically depending on the rule-based approach. But now gradually we are giving the free hand to the institutions to come up with standards. Standard good for the market, good for the players, good for the institutions, right? Otherwise, not to damage or destroy the market. That's what the expectations. That's what the expectations. Okay. Under the rule-based approach, interpret the rules to some degree. Principle-based approach, usually supplemented by the underlying rules and code of practices, aiming to conduct of business with integrity, protect investor, reduce systemic risk. That's a typing mistake over there, right? Should be C, huh? A, B, C. Reduce systemic risk. Why? Principle-based approach, conduct business with integrity. Hope you could remember what the integrity is, right? We talk about the integrity of the people, integrity of the institutions, right? That's the most important, right? Integrity cannot a temporary one. You have to build up in the long run. That's what the most of the financial institution in the world, right? People are treating them as credible institutions because of the long run integrity of the particular institutions, right? It's similar to the people also. If you can trust the people, if you can believe the people, right? With that, you can grow up with the integrity, right? So then the next one is protect the investor. Who are the investors, right? Investors in the banking sector, finance sector. Here, protect the investors means they are not depositors, but sometimes some textbooks, they are talking about the depositors also investor. But if you look at the real scenario, right? Investors are those who are contribute the capital of the particular institutions, right? Particular institutions. Those are the investors. Others are depositors, right? Reduce the systemic risk. Reduce systemic risk. Systemic risk, the risk associated with the system, entire institutions, right? Entire sector, right? There might be issue. Nothing to hide on these days, right? Everybody knows, those who are working in the bank, there is issue with regard to the exchange, foreign exchange nowadays. Am I correct? Right? If you look at the exchange rate fluctuation in these days, right? It's a kind of risky. It's a kind of risky, right? Investor cannot go for a investment, or otherwise business enterprises cannot go for the business. Why? Because the rates are changing day by day. The trend is moving up, right? Trend is moving up. So that will create this risk of the particular sector. Risk of the particular sector, right? Perhaps that may create the entire system risk or entire risk of the particular institutions. Now look at the money brokers, foreign exchange dealers, right? How can they work under this critical scenario, right? Because rates are changing day by day. They cannot make a prediction on that, right? They cannot keep their margin as required to undertake the business. Because of that, right? They have systematical risk on that, right? System associated risk on that. That's what we are talking. That's also come to the credit aspect as well. Now I believe that most of the bankers, they have surplus money, liquid cash. Now they are trying to find out the opportunities for investment. Right? But investment opportunities are very limited. Right? Investment opportunities are very limited. Because due to these pandemic situations, businesses are not moving up. Right? Most of the businesses are not in an earlier level. Nobody wanted to expand it because no export-import market. There are some restriction on import raw material. So people are not willing to expand the market. Likewise, various factors associated with the particular situations. That's what the systemic risk is created. So likewise, this is most important in case of banking sector. If you don't have a business, if you don't have much customers, if you don't have a lending, if you don't have money, right? So how can you do the business, right? That's what the issue. That's create the systemic risk. Now look at today I just want to highlight the power of the regulator, right? Power of the regulator. I believe that I don't know whether I have done it. Have I done it? Those things?
Last week we did that one.
I'm sorry?
Last week we did that.
All right. Okay. Right. Then the power of regulator. There are three, step of regulations. Three type of regulations. Right? One is authorizations. Right? Number one, they can authorize. Number two, supervisions. Number three, enforcement. In simple way, right? Simple way. Just explain authorization mean, right? Giving license to undertake business. License or permissions. In a simple manner, permission to undertake business. So remember that, right? License or permission is necessary for each and every business, not the financial sector business, right? Then the supervisions, right? There are some sectors, not only there are, right? All the sectors in the economy under the supervision by the various kind of supervisors, right? Let's see those. Who are those supervisors? Right. Then the enforcement. if there is any violations, regulator can take the actions. Right. These three scenarios is common to almost all the goods and services. Right? Now remember, in these days, take a simple example, rice and bread. Much demand, food items. There is a control price on rice. Right? Bread, control price, as well as, right, net weight. Control price as well as net weight. Okay. Now this is the good example as to talk. Right? Who authorized? Who, right, impose these actions? Control price or, right, size of the particular items or quality of the items. Rice and bread, who monitor it? Forget out the banking sector, right? Those two items. This is the most important item in nowadays. Consumer Affairs Authority, right? CAA. They are the people who, right, monitoring it, price and quality. Price and quality. Okay. They are the people who, right? They are the people who authorize. CA is a authorized agent to monitor those things. Authorized agents. Or in our word, they are the supervisors or regulator. Right? So that's the authorizations by the government. Are they supervising? Here, not supervising, we call them as inspections. So similar to banking institution, inspections. Right? Do they do it? Yes. Right? They will visit the PETA market. Only the PETA, right? And check the price and quality. Right? There is a regulation, so guideline on that, the price. Right? Sambar this much, Kakulo this much, Nadu this much. Like that. So they will check in line with that. If there is a, right, mismatch or, right, that's a violation of that, they will take the actions. Now remember that if there is a price on that, right, 100 rupees, if they sold it to 105, that's the violations. Okay, control price is 100. If they sold it at 95, so is that violation? Is that violation? Is that violation? Price is 100. That's gazetted. TA is monitoring it, right? CA is monitoring it. But the traders are selling it at 95 rupees, not 105 rupees. Is that a violation of the gazette notifications?
No.
Yes. Right? We can say it's not a violation of the gazette notifications. Yes. In case of consumer item like that, right? That's okay. People are treating it as a right good scenario for the customers. Now, take that simple example to the banks. Right? Say that, right? Fixed loan, right? Say 15% or something like that. Loan rate. Now say, good example, take the housing loan. Housing loan rate generally is around 7.5%. Right? Okay. Banks are free to lend, right? Less than or more than that. Right? Okay. If it is a more than, nobody go. Nobody go. Because the market rate is 7.5. But it is a less than, say, one bank is providing at a 5%. Right. What would be the situations? What would be the situations? Is it healthy for the market, particular business? Right? This is what called undercutting. Undercutting, then there will be issue with regard to the how he is going to this money at this rate, lend at this rate. That's the reasonable questions regulator might ask. Right? Because deposit rate are almost monitored. Deposit rate are decided by the CBSL. Right? Market rates. Then, right? So loan cannot be, except the welfare loan. Loan cannot be usually in a practically less than this scenario, except the welfare loan. Or otherwise, you can't have a special privilege for a special person. Right? Market rate is 7.5. If you are giving the right company owned by your director, bank director at 6.5, that is also favorism. Right? That's what if there are any type of facility granted to the directors which are below the market rate, that will create the conflict of interest. Under the corporate governance, you may understand it. Right. I just want to highlight the different product and different market sector over here. Right? Different product and different market sector over here. Then the hope that you can understand, yeah, right? You understood these situations. We will take one by one again later on, just to give the kind of briefing for you. Now enforcement. Talk the enforcement. Right? You know that enforcement, when you say enforcement, right, you will get the idea. Right? Enforcement means the action taken by the supervisor. Action by supervisor. Actions. Action by supervisor. But if it is an enforcement, it's not a good one. in our terms, right? It's not a good action, right? So what they are doing is regulate. If they find out the regulator, if they find out any breaches of law, rules, regulations, right? Then they will have examinations on that. Examinations. We'll talk. The examination might be different, on-site, off-site, like that. We'll talk later, right? Examination, right? If they find out reasonable reason to whether you have done these violations or breach the rules and regulations, they can take the enforcement actions. Right? In a different way, right? The simple action might be warning. Warning, not to do it again, repeat it again. Then penalty. Then restriction of business. Right? Then, right? If you are not adhering to regulators all the way, then they can ask to close the business and wind up. Close and wind up. Right? Or cancel the license. Cancel the license means you can't undertake the business. That's what the basically enforcement. That's what the regulator, you must be very careful, especially in the financial sector regulator, not like other regulators, right? In case of financial sector regulators are more powerful than the other sector regulators, right? If you look at the Consumer Affairs Authority, basically what they do is they may enforce the fine, right? Sometimes they will take the particular traders to the court level, that's all. They are not going to close the business most of the time, right? If you see the kind of utility commission issues, right? Electricity, water, those kind of things are monitored by the utility commissions. If there is anything goes wrong with these utility issues, utility commission will take certain actions, but they are not going to close down the business. But here, financial sector regulator is different from those type of regulators. That's what I just want to highlight. Right. Now look at the step of regulations and authorizations. Right. Number one, granting the operating license, permit to operate. Sometimes if you see, those are in a one aspect, but there are differences on that. License and permit to operate is something different. License mean, right? Okay, if you want to start the bank, finance company, right? So you have to secure the license first, right? In case of banks, you have to get the license from the Monetary Board of Sri Lanka, then finally Minister of Finance license. Then until you fulfill all the requirement, you are not permitted to operate. That's what the license means, just kind of documents. Just kind of document for you. Right? Anybody can have this type of license. But to operate it, you must have some sort of structure on that. Right? What is your capital? Where are you going to start? What is your key officials? Right? how you're going to start it. Likewise, you must show those things, right? So license and permissions seems to be a one angle, but if you look in the practical scenario, once you secure the license, right, regulator may not operate you to, right, permit you to operate the business, but you have to fulfill the another certain requirement, right? That's what the granting operating license. Now you see that's this coffee garden at the tea shop in your village level, right? You know that Pradesh is about municipal council. They just give the kind of paper to operate the business. They are not coming and inspect the premises, right? They are not bothered about whether you are open or not, right? But the financial sector is a totally different from such a scenario, right? The tea shop, whether you open or not, nobody caring on that, right? But here, once you secure the permit license, right, within a certain period, you must operate it. That's the specialty of the over there. Then the second point, should undertake only the activity that is authorized, right? The banking business or financial sector business, you must undertake activities only by authorized regulator. That means authorized activity only to undertake. If you secure the banking license, in addition to that, you have to secure the foreign exchange license. Then you have to, right, secure the, if you're having the kind of stock brokering firms or insurance brokering firms, that type of business, you must get the authority on that, right? That's what the should undertake only activity that is authorized. If you're authorized to undertake the banking business, your business should be banking. You should not go to the insurance, right? You should not go to the insurance. That's what the should undertake. If you are violate the terms and conditions, regulator will take the, right? Regulator will take the action. That's what the third point highlighted over here. Must not operate, violate the permissions, right? Must not operate, violate permissions. That's the must. Must mean you cannot do it. Strictly you have to follow it. Must not operate, violate permissions. So that means your operation should be in line with the permissions. Your activity should be in line with the permissions. You cannot undertake any activity, businesses, not in line with your permissions. Then you should not violate. Violate means, yes, you got the banking license, right? So you know that without knowing to the regulator, you will do some other business. Some other business. You cannot do it. So whatever the permissions, if you want to undertake the particular business within that particular premises, you must get the permission from the regulator, right? You must get the permission from the regulator. That's what, if you violate the terms and condition of the permission license, then regulator will take the actions. They consider the following factors, right? So what are those factors, right? This is important for the, especially in the banking sector. Fitness and proprietary. People should be fit and proper. Fit and proper, right? Fit to undertake the business, fit to sit in a board, right? Proper to sit in the board, right? That's what under the corporate governance regulations, right? In case of banking sector, directors are appointed. Bank Supervision Department of the Central Bank as a regulator, they will check your fitness, board members' fitness, and whether they are properly, right, proper people to handle that business. That's how, even when you are working in the banking sector nowadays, if you are recruiting the junior people, right, fitness we always check with academic qualification and interview junior people, right? How do you check with the proprietary, right? Basically, get the reference from someone else, senior people and the reputed people, and right, and most of the banking institutions are dependent on the police report. So that means there should be certification to say that you are not involved in the criminal activity, right? Even though you are fit, if you are not, right, proprietary, if you are in a criminal aspect, you may not, right, fit for the undertake the job of the particular institutions. That's what the most of the important factor. Perhaps you might have seen that in some banking businesses, when the CEOs and board of directors are appointed, central bank have taken the decisions to, right, reject the name of some individual, considering those fit and proprietary criteria. Right. Why? Now see why this banking sector, this point is more important. Because they are handling the someone else's money. They are handling someone else's money. If they are not handling those money in a proper way, in a different way, which are not accepted by the market, right, you can't do the business. You can't do the business, right? So fitness of proprietary, right? Then under that, honesty, integrity, and reputations. That's very difficult to find, right? Honesty, integrity, and reputations. In a banking sector, honesty is most important, right? Honesty, right? You should be a honest guy, honorable guy, right? Because otherwise, if you have a mind of getting the money back or steal the money from the particular institutions, you will lose the honesty, right? If you are working in a banking environment, your people are not honest. They are handling millions of money per day, per hour, per minute, right? There are something can be happen over there, right? You see, when you are counting the money, if you drop out the 5,000 note somewhere else, and later on if you grab it, right, you will lose your integrity. That's what when you are working these type of institutions, honesty is most important. Then the integrity of the people is most important. The reputation among the sector, right, is a very integrated people, is a very good people, right? He doesn't have anything else, right? He's not a criminal. His records are very clear, right? He always loyal to institutions. So likewise, right, integrity is most important. Then the reputations. The reputation is most important to build up the institutions. If you are famous in a business, your approach, right, your brain, the that what you call that personal management, right, administrations. Likewise, if you build up the reputation on that, right, banks or other financial institutions are right without any competitive, they will hire those type of reputational people, because reputation is most important for the run of the banking business. You know that, okay, say that, okay, this particular individual is now chairman of the particular bank. It might be the good one. CEO of the particular bank is a very good guy, very clever guy, right? If you move to another bank, say that, okay, this particular institution might be very good thereafter. Likewise, right, they will talk most of the things on that. Then the competence. You must be competent to undertake whatever the works. Then the ability and organizations, right? Whether it's a big or small bank or financial institutions, right? You must have organization skills, right? Face any difficult situations, any critical situations, any liquidity situations, right? Being the CEO or senior management guy, you must be competent enough. You must have ability to face that situation and find out the remedy for that one. Otherwise, no point you are integrity people. Now today, right, your bank are facing the right liquidity crisis. Using your brain, your reputation, your ability, you must try to find out the way to sort it out. Otherwise, if the CEO or senior guy is not competent enough to handle that kind of problems, that will lead to the collapse of the particular bank or particular branch. That's why the right big bank in America, right, collapsed within 2 to 3 days, because they lost their honesty, integrity, and reputation in the market, because they don't have ability to face the critical situations, right? Then the financial positions. Financial positions also most important, right? Before you join the particular, you see, especially in the financial institution, you are dealing with the financial matters, money matters, right? If you're so distressed on the finance, if you don't have money, once you become a CEO, what would be the situation? You try to grab the money, right? At least you must have some sort of cushion about your financial situations. That's what the most of the banks, they are paying high salaries to keep this senior management, right? Keep this senior management, because they are in a good financial positions. That assume that they won't do any wrong thing. Otherwise, that's a practical scenario, right? That's a practical scenario. Now see, look at the current society now. If you don't have money, enough money, right? If you think that your money you are having is not enough for your livelihood, you are tend to steal something, right? Rob something, right? The financial position is most important. If you are sound on the financial, right, aspect, you may think that, no, I have enough money, but in our country, we are not saying enough money, right? Huh? Whatever you are selling that, I don't have money, right? So that's what the financial positions are most important. Bankrupt people cannot run the financial institution, because he bankrupt in every aspect. Bankrupt in every aspect. You cannot hire the CEO, those who are bankrupt, because his financial position is so bad. Likewise, okay, scope of the business profile and plan. Scope of the business profile and plan. That's also most important before you start the business. Now see, look at the banking or finance business today. Those are having the huge competitive market now. There are big players, smaller players, right? So grab the market share. Think about the grabbing 1% of the market share of the particular business. It's not easy, right? It's not easy. Very difficult now, because sometimes some can argue that banking institutions in our country are more than the adequate. That's why perhaps you might have seen that last couple of months, few foreign banks closed their branches and they went out of the country. That's because they don't have much of the banking business here. There are established banking institutions which grab the market share. So that is a heavy competitor for the newcomer to grab the market share. If they don't have proper plan and proper way to grab the market, then the business profile and plan, right? Business profile and plan. If you want to enter into the market, if you want to grab the market, at least 1 and 0.5% shares of the market, you must have a good plan, right? And the good profile of the CEO, right? The directors are respectable people in the society without any, financial difficulty, might be based on trust on those people, right? Customers will tend to come over there. Perhaps you might have seen that. We have to openly talk on that, right? And the Sampath Bank came into the market. Sampath Bank came into the market because with the new technology, everybody knows it. Because of this new technology, right? Quickly and without very short a period, they grab the market share. So they introduce a new technology, ATM, those kind of things they introduce, and they given the kind of facility for the people to withdraw and deposit the money, even a day and night. But by the time other banks, they accept the money in the daytime, almost a very limited period. That's the revolutionary measures undertaken by the particular banks. Because of that, each and every bank have to find out the survival of the methods, right? Foreign banks also went on that aspect. Right? Now, almost all the banks are competitive in that aspect now, right? Almost all the banks are competitive in this market now. IT-based banking business, rather than the physically moving to the banking premises, right? Likewise, then the management responsibilities, whether the particular individual discharge their responsibilities as required. Being the CEO or CFO, right? Being the CEO, CFO, his obligation is to properly discharge his duties, right? If the junior people understand he's not clever enough to handle these responsibilities, right? There might be the issue with regard to the particular factors. That's what the fitness and propriety is most important, right? When you are running especially in the banking business. But remember that it's not common to the banking business. It's common to each and every business. But here we are talking banking business because this one is very special for the banking business. One can say that, okay, yes, banking business, you need these kind of qualifications and experience. But if you run the tea shop in the village level, you don't have any experience. But my dear, even run the tea shop also, you have separate skills, right? You have separate skills. Everybody cannot run the tea shop. Everybody can run the hotel business. No, we cannot, right? They cannot. That's what the skill and competency is most important. There are some fit and proprietary skills inbuilt in your body. Sometimes we don't like to take the risk and we just want to work in somewhere, right? We don't like to take the risk. That's how some people are. Well, some people are willing to take the risk. They will fail, but again they will take the risk, and finally they will success. That's how most of the businessmen reach that particular level, right? So likewise, right, in case of this banking business, we cannot undermine those situations. That's what the right step of regulation, fitness and propriety, we looked into that, because regulators' job is to regulate, right, and safeguard the depositors' money and investors. That's what those factors are most important in the financial business, right? Then the compliance arrangement and activities. Compliance, you will have a separate lesson on the compliance. Who are the compliance? What are the compliance? What is the compliance? Who are the compliance officers? What is their job? Right? Those kind of, right? What are those obligations? Those might be discussed with other lecturers. But I just want to highlight over here. Here, I'm not going to respond to the compliance officer. Here, I'm talking about the compliance arrangement. Right? Compliance arrangement to supportive measures of the compliance situations. Being the compliance officer, you cannot comply all the things. You must have steps on that. You must have staff. They should be trained, right? There should be procedures, right? Some rules like that to undertake these kind of compliance functions, right? Now see, you have to comply with the Foreign Exchange Department rules. So that means there should be, right, thorough and understandable official to interpret it, right? Then the practical, they must have experience on how to do it. If they are not doing it proper way, right, they should know, right, what would be the repercussions. That's what the compliance arrangement, within this compliance arrangement, staff training is most important. Compliance staff is a backbone of the particular institution because they are the people who know every aspect. Usually now the compliance divisions, right, staff are trained proper manner, each and every aspect, and the old aspect of regulators, guideline, rules and regulations, and they should be in a good position to understand what the compliance is, what are the new rules, old rules, what are the differences, right? How they're going to change it. If something goes wrong, what are the measures they have to be taken, and what are the things have to be in right point, right? If you are not done at the right point, what are the repercussions? Those things should be known by the compliance officials. The obligation of these things are coming to the compliance officer. In that sense, you must have very good trained staff. So trained staff to be created by staff training, right? Daily or weekly or monthly or once the new guideline or instruction come from the particular regulators, you must have such a training and right practices of that. Then there should be operating procedure. There should be operating procedure, right? You can't operate, you can't do anything without any procedure, right? The banking business, we have a lot of procedures. Now, good example, once you become a teller or cashier, you have to follow certain procedures, right? You have to follow the certain procedures. Okay, you will be given the particular stock amount of cash. You have to have some record on that. End of the operations, you must return, right, balance available with you and your collections proper manner. Proper manner. It should be 100% accurate. It should be 100% accurate, right? It should be 100% accurate. You can't say, "Ayo rupiah siya adune." You can't say. Anyhow, you have to find it out. If something goes wrong, that's your obligation to find it out where it has gone wrong, right? Likewise, not only that, I just took the simple example about the tellers, but even another official category, say that approval authority, authorization procedure, right? Authorization procedure. Now, see, if you are giving the loans, right, in a banking sector, you have authorization procedure, right? First officer, second officer, you something like that. Branch manager, regional manager, AGM, DGM, like that, right? There should be operating procedure. You must follow it. Why? You cannot overlook the operating procedure. If you are overlooking the operating procedure, mean someone can manipulate it. That's what the procedures are important. Procedures are important. Then the in-house rules. In-house rules. What is this in-house rules? Can anybody explain it? In-house rules? In the banking sector one? In-house rules? You are following it, I know that, right? Those are generally, right? Those are generally common to the particular branch or particular banks, right? Particular branch or particular banks, in-house rules, right? Cash handling, check handling, those kind of things are, right? Particularly to particular branch or banks. And that authority of powers, approval authority or discharge authority, right, come to in a various different categories, right? Why these in-house rules are important? Then the delegation of the authority vested with the few people, right? Delegation of the authority is vested with the few people. There might be cross-checking on that. Teller, he himself cannot take the decisions, right? He will go and see his next senior. The particular individual go to the next senior. Likewise, then the cross-checking is most important through these in-house rules, right? Otherwise, those rules can be during the particular period. Operating days, yes. Operating hours, yes. Those are the rules you must follow, right? In some banks, they have in-house rules also. So the tellers and the officials in the front office, they should have a kind of uniform on that. That's also rule. That's because of the identification purpose. If you go to, I haven't seen generally in our banks, but if you go to the foreign banks, not here, but if you go to the abroad, if you may find the particular banks, officials are having the particular uniform or some remarkable identifications, right, scenario to identify that those people are, those individuals are working in a particular bank or particular finance house, right? Without that, they are not allowed to come into the particular office, right? That's how they maintain it, because people know that, right, those kind of people are working in with them, right? If they find out any kind of misbehavior outside the banks, right, general public know those are the people who in particular finance institutions, right? That will have a kind of bad impact. But these in-house rules basically limited to the particular branch or banks, right? Those are not that much of tough like in operating procedure, but usually people tend to follow it. People tend to follow it. Right, monitoring. Monitoring. Who monitor? Who and how monitor? Right? Who and how monitor? Who is monitoring? This obligation vested to each and every officials. Look at the branch level. Branch level, there are internal arrangement to monitor. how these works are going on, moving on. Can you go out of the particular branch? Say that once you become a teller or cashier, are you allowed to, go out of the particular branch during the peak time? You have to work during that period, right? Being the authorized officer, monitoring officer, right? Can you go out without any permission from your seniors? No, you cannot, right? That's why these monitoring processes are there. Everybody will check where you and how you are working on that. That's the most important part. Otherwise, right, if nobody is going to monitor your behavior and activity, right, financial transactions, right, anybody can do the manipulations, right? Anybody can do the manipulations. That's what those things happen in the international market as well as our local market, right? As well as our local market, right? Okay. Then the customer complaints. That's also good for the compliance officials. Compliance arrangement. Customer complaints. Are you getting the customer complaints? Anybody?
Yes.
Yes. Customer complaint on what? We'll discuss it. Yes. What is the common customer complaint in the banking sector nowadays? Right? Big queue, time taken to complete his whatever this task. Rates, loan processing. What are the most common complaint in the customers? Rates, foreign exchange rate, interest rate. Yeah, there might be various type of customer complaints, right? But usually during the rush time, there might be a lot of customer complaint. Those are temporary. Those are temporary. Can be sorted out within a second or within a very limited period. But there might be big complaint, huge complaint about the customer, about the rates, loan procedure, right? Time taken to approve the loan, interest rate scenario, right? Penalty charges. There might be a lot of customer complaint. That's a common complaint in these days, right? Our banks are always traditional approach. They are not looking at the customer angle, right? That's not the one good complaint in these days. You may see that here and there, newspapers, right? Whatever the electronic media, you can see that banks are not, right, honor to customer obligations. Why did this complaint? Right? But those things are really, they haven't understand the banking concept. Without understanding the banking concept, anybody can complain. But you must understand what the bank is. Right? The bank money is not your money. Those are the someone else's money. So that means you have to take the right precautionary measures, lending and taking the deposits. That's one aspect, right? So you don't have free money, right? You must safeguard the customer deposit. So based on this deposit scenario, you must give the loan, right? Based on the recovery process. That's number one, right? Number two, being the bank, your obligation is to support the development of the country, economic activity. So that means you must support it. Yes, to a certain extent, that argument also correct. Banks are backbone of the economy. They have money. They collect the depositors' money. Those money should be, right, given to the country developments. Yes. But again, scenario here is, right, which way, which directions, whether those directions are safeguard for your customers and your bank, your operations. And those things you have to be very carefully look into that. So by the time there might be the customer come, because there are some time back, there was a common complaint about the credit card interest rate. Credit card interest rate. There's a lot of complaint to the central bank as well as the banking sector, saying that banks are charging huge rate on the credit cards. Because of that, central bank have to take the actions to monitor it, right? Impose certain limit on the credit card interest rate. That's what. Then some time back, there was a complaint about the foreign exchange rate also. Nowadays, it's a kind of general complaint, right? So likewise, and sometimes there was a complaint about the farming community. Rates are high. That's what the government have taken decision to limit the credit to the farming sector. Limit mean there was a compulsory margin by the banks to agriculture sector. 10% of a loan portfolio should be given to the agriculture. There was a regulation sometime back, 2 years back. So that means banks should lend at least 10% of your loan portfolio to the agriculture. In the 80s, there are some regulations. You have to maintain the margin to the housing sector. So likewise, based on the customer complaint and by looking at the economic developments, government can take the decision to limit the credit or expand the credit. Limit the credit to expand the credit. And the good example is 2 to 3 years back, each and every banks are required to undertake senior citizen deposits amounting to 1.5 million, and rates are decided by the government circular, finance minister circular, right? Rates and the amount is decided by the finance minister circular. Whether you like or not, you have to pay it. Whether you have income or not, you are liable to pay it, right? Consider the senior citizen economic status. So likewise, based on based on the senior citizen complaint, right? There was an incentive payment by the government to compensate that interest. I don't know that it is a continuing, but anyway, banks are paying, right, interest rate to the particular customers. But there was an issue with regard to the treasury and the particular banks to getting this interest rate compensations. Anyway, it's become a law. Then the notification requirement is a 2 different way, right? It's the compliance teams are notice that they should issue the kind of notices about the particular development, right? They should provide the notices, circulars to all the employees saying that this is the current requirements. Because otherwise, branch level officials, they don't know about this kind of development. Might be senior people know, but operating level junior people, they may not. That's the obligation of the compliance official to give the kind of chance to learn and, right, get the idea of particular changes. That's what the compliance team should circulate or publish these kind of development and changes, right? Each and everybody of the banks, not being a requirement. And then by the time if there's a practical difficulty of the junior people, right, working level staff, right, implementing the procedures, practices, there should be way to inform the senior management or compliance team about the practicality of those kind of requirements. Those kind of requirements. Right? Both way. You should be in a position to give the kind of chance for those people to, right, learn more and more on that. And they should also be given the chance to, right, communicate with you their difficulties and practical scenarios on their operations. That should be a, right, good way. That's why the notification requirement come into that. Otherwise, right, if it is one way, there won't be healthy requirement, healthy attitude of the employee. That's how notification requirements. For management, that's the most important for the banks. Not only the bank, but the other financial institution as well. Right. Management is important. Why? The management should be the management, those who are having a good experience about the managing the institutions. Right? Managing the institution. That's the important. Right. So managers should be qualified and experienced guys. Here management mean that's depend on the bank to banker. There are some senior management, there are some junior management. So qualification and experience are depending on the particular category. If you gazette to make a publication, recruit the new officials, you say that, okay, those are the qualification for the recruited people. If, right, having the kind of recruitment for the senior management, they will highlight qualification plus their experience, right? Why those qualification and experience are much more important. There are some argument on that, whether qualifications are necessary. Some argue that whether experience are necessary. Yes, but even though there are some argument on that, we know that qualifications are most important, as well as experience also most important. Might be most qualified individuals, if they don't have experience, working experience, practical experience, they cannot achieve the goals. Right? Even the particular individual have experience, if they don't have qualifications, right, their expectation may not be as expected. That's what the finance sector, there are some qualification, limit of the qualifications as well as the experience. Why? Once you join the bank is expected your productive assets. You must contribute to the bank in growth and their revenues. Right? If you are not contributing that much of expected level, right, banking sector performance may not be as expected. That's what the qualification and experience are much more important. But wherever you go, our qualifications are number one, right? And experience also in a similar category. So qualification and experience are most important for the finance sector. Then the independence of risk and control management. Independence of risk and control management. Risk management and control management. That's important. You must be independent of risk management. Right? Now see, now take the example like that. The compliance divisions. You be a chief of the compliance, chief compliance officer. You must be given the independent chance to, right, look at the compliance functions of the particular institutions. Why? Why? Because you are a chief compliance officer. You are the people who having the qualification as well as experience about the compliance. Right? If your chairman talk to you saying that, okay, you should not monitor these aspects, what happened? There are limitations of your job. Now see, the chairman will call upon you and say that, okay, don't check the foreign exchange coming to my bank. Don't check the source of that. Can you do it? Right? You cannot do it because you are a chief compliance officer. Because, right, there is a regulation by the various supervisory agencies about the verification of the source. If you are not doing it, the particular regulator will, right, look into that. If they find out any kind of deficiencies and overlooking of those kind of aspects, they will take the actions again, you as well as the senior management. Then you must explain about the particular situations. The risk. The risk is most important. That is, as I mentioned earlier, risk is, right, most important. Liquidity risk, operations risk, IT risk, something like that. Right? Those things should be monitored very carefully. And the management should know what are the risks associated with the particular operations. And the control management. How to mitigate it. How to undertake it. How to face it. Right now, see, right, today you have a issue with regard to the liquidity. But don't worry, these days you have ample liquidity. Right? In the banking sector, right? So say that, assume that you have liquidity issues. So you must be in a position to find out the way to sort it out, right? Sort it out with the support of this your senior management or your support of your sister companies or sister banks. Sister banks. That's how the management skills are most important. Now, the most important part I'm going to talk in the conflict of interest. Conflict of interest. Under the corporate governance, this becomes most key issue, conflict of interest. Conflict of interest. Interest. Right. So here, we'll take the simple example on that. Right. You are bank manager. Bank manager. Your wife also bank manager. She also bank manager. Right. Now working in the same bank, if they have a chance to work in the same branch, what happens? Same branch. Issue with regard to the conflicting might be arise. Might be arise. Because we think that, right, might be some follow-through effort to undertake the business. Right, that's the number one. That is what the banking sector or financial sector, husband and wife are not allowed to work in the same branch because of the conflict of interest. The husband say that you do it, right? She will undertake it. Sometimes she will ask you to do it, you have to do it, right? Or vice versa. Different way. Okay, right? So, and the passing the entries might be easy. Passing the entries might be easy. Why? Both are colluded. Then the risk of financial crimes are right more compared to other couple, because they get together and undertake some financial crimes. That's why conflict of interest occur. Now that's one scenario. Because of that, couples, those who are married, are not allowed to work in the same premises or same branch. Sometimes husband may work in the branch, wife may be work in the personal department or right premises department or something like that, supplies department, because those two are entirely different. Right. Then okay, you are a bank manager, right? Your wife is a business lady, right? Maintaining the account in this particular branch. Okay. She applied for the loan. And being the branch manager, you have authority to approve it. You have authority to approve it. Usually, right? If you are giving this type of loan, there might be concessionary aspect. Right? Normal customers get at the 15%. Your wife has requested for the loan. Being the manager, you have authority, right? 15% as a normal, then you will give it as a 12%. That will create a conflict of interest. That's how. Likewise, then the most of the good example, I believe that if you listen to the banking sector and news media 1 year or 2 years back, I believe there are also transactions undertaken by the one big banks in Sri Lanka, right? Okay, board of directors, right? So one of the board member, right? Members company request for the huge loan, big loan from this bank. It went up to the board of directors. This particular company owner is a member of the particular bank board of directors. Application came to the board. Board has to take condition to the concession rate. Right? That will create conflict of interest. And there are few issues in these days. Carefully watch the news. Like similar to that, there are a few cases. I don't like to highlight those things. That's how you create the conflict of interest rate. Being the senior guy of the particular institutions, given the facility at the concession rate, your son, daughter, wife, your brothers, sisters, and fathers or mothers, your family members, that will create the conflict of interest. Then the board of members, if you are giving the concession rate to the right, your company, your wife company, your father-in-law's company, that will also give the right conflict of interest. Right? Being the same people, wife and husband are working the same family, activities are decision taken by colluding them, that will also create the conflict of interest. Because conflict of interest is harmful to the particular institutions. making the loss to the particular institutions. That's what the conflict of interest should be avoided. You may learn those things much more under this corporate governance scenario. Did you get my point about the conflict of interest?
Excuse me, sir.
Yeah.
Actually, that insider dealings also come under this topic?
No, my dear. No. Insider dealing mean, right? Insider dealing means the inside information given to anybody. Right? Inside information given to anybody. Now, it shouldn't be your wife or husband. It can be released to a friend also. Right? Here we are talking about this conflict of interest. You know that particular individual should have a link with a particular company or group or particular relatives. Right? Now look at the Raj Ratnam case, famous insider dealer. Right? Inside information, you know that the people who given the inside information are totally unknown to Raj Ratnam. This American case, Sri Lankan guy, most famous guy who dealing with the insider dealing. These teams are totally unknown to Rajaratnam. Right? Benefited was the Rajaratnam and his company. Right? Rajaratnam doesn't know who gave this information because these people doesn't know who gave this information. But finally, they had a collusion on that. Because they are not relatives. They are totally different parties. Only thing is, right? So under this insider activities and dealings, those people, the inside information was sold to this guy, Rajaratnam, and get the money back to because of those informations. Rajaratnam, what he has done is, he manipulated the market based on the inside information given by those people. That's the insider dealing, right? It's not related to this. This is a purely in your company, your relatives, your friends, your relatives, right? That's what. Now, the husband and the wife case is a good example because it's conflict issues. That's what I am telling you. Even the banks, those couples are not keeping the same place. Earlier, under the even teaching professions also, right, husband and wife are not allowed to teach in the same school. Now that has been different, right? Especially in the financial sector, those aspects are well taken. Now, husband and wife might be in the same bank, but not in the same division or same branch. Right? That's what I told you. Husband might be in the branch manager, wife might be working in the personal branch. But those are two different scenarios. Because the bank branch activities are not related to the personal branch activities. Or supplies division activities. That's what. Sometime might be, they can do what they want. But that in a visible manner, you can't say there is a conflict of interest on that. Did you get my point?
Yes, sir. Thank you.
Okay, right. Reporting and management informations. There I should be reporting mechanism and also manage information, right? Good for the management. That's what right? So they must have an idea about the, right? Regulator will check what would be the reporting mechanism as well as the management information mechanism. How the management informations are coming to the lower level grades, whether they are receiving it, whether they are going through it, and right, what would be the reporting mechanisms, top to bottom and bottom to top. That's the most important. Now see, why those systems is important. CEO will take the decisions. If the CEO's decisions are not coming to the junior people, will it stop at the branch manager level? The junior people doesn't know what will happen, right? If it is important for the junior people, they must have system to give this information to each and everybody. But very lately, most of the banks are having their own web page, internal web page, having access to each and every employee about all the information and circulars and decisions taken by the bank for their own informations. That's a good scenario, right? Then while knowing the fact that you have a web access, internal web access, right? Nobody can't say that, no, I haven't seen it, I haven't got it, like that. This IT in the technology is having that one. That's what we have seen, that most of the banks are circulating, passing through the information through this internal website, which are having the access to each and every employer. But that depends on the category of the particular employer. That's good for the management scenario. Those are management information. Everybody should know it, how to operate, what are the decisions taken by the board, what are the decisions taken by the CEO, what are decisions by the compliance officer, what are the decisions taken by the investment officer, like that, CFO. Those informations have to be there. That's what the reporting and management information are most important. Right. Resources. When the regulator comes, they will check, right, what are the resources available to particular institutions, whether they are having the adequate financial resources, whether they have adequate financial resources. Why the banking sector required adequate financial resources? Why the banks require the adequate financial resources? Bank, because they are undertaking the banking business, right? They are undertaking the banking business. Because of that, they should be liquid all the time. They shouldn't have financial constraint, deposit constraint, right? Constraint on deposit mobilizations, right? So because of that, right, supervisors will check whether their resources are coming, how the way of their deposit mobilizations, what are the measures they have taken to deposit mobilizations, right? Whether they are paying the right rate of interest to the depositors. Are there any manipulations on that, right? Are there any complaints from the customers and officials? Likewise. Then the human resources, right? Human resources is most important to run the banks, right? Especially nowadays, banks should have more resources in the compliance. Compliance become a number one now. In addition to now see, most of the bank in the internationally, now they have a CEO, Chief Financial Officer, and the Chief Compliance Officer. Those are the three key officials of the particular banks now. So in that sense, so compliance resources are much more important than the others, because the compliance division is entirely responsible about the regulatory environment, right? They are the people who compliance with the regulator. Then they must have a well-trained, well-educated team in the compliance divisions. Then the front office. If you don't have a trained and skillful official in the front office, you cannot work. And similar to back office as well. If you go to the bank branch, now most of the banks are much better if you compare to the 10-15 years ago. Front office officials and back office officials are, right, so efficient. But I am not, in my angle, I am not telling that they are 100% efficient, but they are efficient. But we have to work more on that, giving the training for them to identify the customer, or his requirements, and how to fulfill his requirements. That's the most important, right? Then the training is most important for those part, right? Once you recruit the official, he won't be a good officer. He won't be a trained officer. He cannot identify the customer, and he cannot identify the taste of the customer. He don't know how to treat the customer. So that's what the most important part is, giving the training for the customer, particular officials, right? training is much more important than the work experience, right? If those things go together, you can create the good human resources, right? Training plus, right, experience. Once you train the people, they will work in that scenario, they will collect the more and more experience. Once you have experience, it's a very easy for them to undergo the training because they know practical difficulties. That's what the human resources are most important. Number one is compliance staff, then the front office and back office, and the next step is training of those officials. Then the IT resources. Now remember that without IT, you cannot talk about the banking now. You cannot talk about the banking now. All the banking institutions, all the financial institutions are run on the IT base. Even in the nowadays, during this pandemic reasons, all the financial institutions and banks are working on the IT resources. IT resources. Deposits, fund transfers, everything are based on the IT. Right? Now see with the check clearance even, fund transfers even. Now earlier, right, bank to bank fund transfers take more and more time, 1 or 2 days. Now within a second, fund can be transferred. And even you, right, your accounts open in branch is Colombo, wherever you go, through the branch network or other bank network, you can undertake the banking transaction, withdraw the money. Right? That's the easy way. Otherwise, there are some payment methods, card methods, but you can transfer the money. So this means, in line with the latest development, IT resources are much more important. But being the regulator, we will look at that even though we welcome these IT resources in the particular bank, we are looking at the both way. Whether it is healthy or not healthy. Healthy for the banks, yes, okay. But if some loophole or rooms are there to enter into the criminals, then, then we will look into that. We will find out the deficiencies of the systems and let the bank to rectify it. That's what the resources. Resources are much more important. Then the risk management. Risk management. Risk management also equally important than the other aspect. Why? If you identify the risk a bit earlier, then you can take the precautionary measures. You can take the precautionary measures. That's what you must need the importance of the experience, right? Than the qualifications. While working the bank branch for a long time, you may know that day to day your liquidity requirements. And sometimes these requirements seasonally vary. New Year season, you know this much of liquidity required. During the Christmas season, yes, we need this much of liquidity. But others, we don't have that much of liquidity. So based on that experience, you must build up the liquidity, and based on that experience, you must release the liquidity to other days. So that what the most important part is the quality of the risk management. How you manage the risk and what are the measures you have taken, and we judge what are the quality of that, whether it's a good or bad. It's a worthwhile for the banking sector development or particular branch, particular bank development, or right, whether it's a qualitatively right admired by the particular customers, the quality of the risk management. Then the risk reporting. There should be mechanism to right report the risk. Right? Might be CEO may not right understand what are the risks associated with the operational branches, the operation arrangement. Because of that, right, there should be reporting mechanism to the CEO or compliance, right, chief risk officer, something like that. right? Most of the bank right now having the chief risk officer, right? He may collect in the risk related matters, facts, but in addition to that, there should be mechanism to report the risk, because these risk reporting mechanisms were developed most of the financial crisis time, right? 2000, early 2000 and end of the 2019. That's because of that, the risk reporting mechanism is most important. Because the risk is most important for the bank. If something goes wrong with the banking business, there will be huge repercussions in the particular economy and people. That's all. The risk matrix, there should be matrix on that. Risks are coming from which way, right? Risks are coming from which way, which directions, right? So by practice, chief risk officer may know those things, how the risks are generated, what are the areas which are generated, which way they have to find out the solution for it. Then the business continuity. That's nowadays this business continuity plan is most important because of the IT technology, information technology. Now most of the time we are working on the IT technology. We don't have ledgers and big books, right? All the computers are working on that. So earlier, if something goes wrong, we can open the ledgers and books and we can find out what are the transactions you have done. But today's, all the things are in IT business, right? IT business, IT platform. If something goes wrong, you may not know what has happened over there if you are not really IT guy. Because of that, so those things have to be in a different way. Another aspect is, if something goes wrong with the particular bank or particular system of the bank, there should be alternative method to run the business, right? That's what the very recently central bank has given the opportunity for all the banks to, right, keep the disaster management sector and disaster management operations, business continuity plan. If something goes wrong, how you start the business? Right? Perhaps you might know this, during the terrorist attack in the various places in the country, we were facing, right, problem with how to operate the business in the original level. Right? Not only the terrorist attack, even the other IT attack, information technology attack. Right? If something goes wrong, you must be in a good position to operate your business as it is, right? You may see that a lot of hackers hacking the IT business, some terrorist attack in various places and various institutions. Even though those things have happened, you must have a business continuity plan, right? That is what we always telling, that you must have a disaster management center site. But these sites should be open to the terrorists, huh? Right? Very close, confidential, and safest place. Otherwise, if it's open to everybody, then these people will come to that place also. First they attack that one, then come to this, right? Then the hackers, especially in the IT system. This is common, nowadays a common scenario. Perhaps you might have seen that there is a hacking of the European banking institutions, some banks. They say that it's from the various countries. They believe that it's from the Soviet attack. I don't know exactly which country, right? But that's the also news source published, right? Then there are also attack on American banks 2 to 3 months ago, right? They guess that, they believe that that was from Iran, but it's not pretty sure. They suspicious on the run, IT people. Likewise. So even though we are talking about IT platform, right? There should be 100% accuracy and right business continuity on that. Business continuity on that. Now see, perhaps you might know that there was a bomb into the Libya 5 to 6 years ago. Libya. Capital was damaged. Right? Then the Libya and Syria both. Entire capital was damaged. Banking sector also damaged. But within 2 to 3 weeks time, they operate all the banking business. That's how they keep those disaster management or recovery or right this business continuity plan in a very confidential manner. Disaster recovery. Perhaps your bank also having this kind of site. Even you may not know it, right? Where those disaster management center or business continuity plan is there, right? It may not be a one place. You can keep it in various places, right? Might be in a Colombo, sometime very far away from the Colombo, right? It may known by the very secret people or few management people, right? Likewise. So business continuity plan is most important if it is a right very dangerous situation. So otherwise, business continuity plan is right simple if it is a normal scenario, right? Risk management. Quality of the internal control. Quality of the internal control. This quality is most important. Internal control, right? Internal controls. We know that internal control in the banking business, internal control is much more important. Banking business, internal control is much more important. Why? You are handling someone else's money. You are handling someone else's information. Right? Okay. Now remember, like this, take example like this. Okay, I have accounts. I have accounts with your bank. Say XYZ bank. Right? I have a 10 million in my accounts. Right? Even though I don't have that much of money in my accounts. Right? Then my wife will come and check with you how much money in my accounts. So you are in a front office. You are in a front office. You are in a front office. Right? XY is a bank, front office, you are there. I have account with your bank. Available balance is 10 million. My wife is come and check with my account and I check with you how much money in my accounts. Right? Okay, what did you say? What you are going to say? Yes.
We can't divulge the information to the third parties.
All right. My wife is not a third party. She is my wife. Why not you give this information to my wife? She is my wife. Right? First thing, right? So banking law, you cannot divulge the secret of the banking information to anybody. even to the wife. Right? There are some occasions, right? There are some occasions you can divulge those informations, sometime to the wife, sometime to the other authorities. Right? By law. By law. Now, there is one scenario very recently I come across, right? Come across similar to that. Similar to that. Not me, yeah? This particular husband, means not one of the husband, is admitted to the hospital. Huh? He became unconscious. He became unconscious. Right? So the bill cannot be settled. Hospital bill cannot be settled. Settled because wife doesn't have money. She didn't have money. So she made a request to the bank manager. Okay, my husband account have money. My husband account have money. Please release me this money to release him from hospital. That's the scenario. Right? What would be the scenario? By law, we cannot release the money except the particular account holder. But this is the kind of very pathetic scenario. Very pathetic scenario. What the manager can do. Usually what the managers are doing.
Excuse us. Under exceptional circumstances,
yeah.
Under humanitarian grounds, we can release the funds to the wife.
Yes, you are correct on that, but subject to the verification by the banks, right? Subject to the 100% verification by the particular banks, right? The manager or particular branch official should get the clear idea about the information provided by the wife is 100% accurate, right? 100% accurate. And top of that, they have to get the legal opinion whether those funds can be released to the wife. But this is the one scenario. The second scenario, there are some legally binding agreement by the banks or financial institution to release the money, right? Release the money, right? Okay, there are some scenarios like that and suspend the account like that. Okay, then the FIU can do it. Can do it. Then the Inland Revenue, Commissioner General of Inland Revenue, under this particular law, right? So likewise, there are few scenarios, right? Few scenarios, accounts can be suspended, but these Inland Revenue scenarios are, it's not much common, not powerful, but FIU scenario is much powerful. If you receive the kind of direction from the director FI, you must honor it. Okay, right. Then the quality of the internal control. Then the robustness of the control, right? Quality of the internal control. I just try to explain you the internal control mechanism and the practical difficulties of that, right? That's the robustness of the particular control. So even though by looking at those kind of things are very easy, when you go to the practical scenario, it's very difficult for you to, right, operate. That's the robustness. Very difficult. And you have to get the clear legal advice on that, right? That's how you maintain the quality of the internal controls. Then the involvement of the senior management, right? Wherever you have a internal control mechanism, it should be involvement of the senior management. Why? They should know it. They also part and parcel responsibility on the particular internal control mechanism. Otherwise, those people can say, right? No, I am not aware. I don't know anything on that, right? That's what this internal control procedure, there should be senior management involvement. Otherwise, junior people may suffer because of that. And the junior people also should know that the involvement of the senior people. Then the right manipulation of these procedures, controls are very low, very limited, very limited. That's all. The next is the testing of the control. You must test this control, but in writing, those control might be very nice, very fantastic, but practically you must test it. You must test it whether it's really working or not, right? Those things are whether really working or not. That's what the most important part of that quality of the internal control. Right. Then we'll talk about the power of the regulator, right? Principle of supervisions, right? Okay. Do we need to take the break now? Okay, 10:40. We'll take the 15 minutes break and come back, right? Right. We'll talk about the supervisions. So far, we have done various kind of aspects related to the supervisions and internal procedures and the diagnostic approval. So now we directly go to the supervisions now. How to do the supervisions, huh? Right. Okay, supervisions. I'll talk about the principle of supervisions. Principles of supervisions. Right. There are few principles on that. Right. Then the number one is diagnostic. 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 You know, if you look at the patients, if you go to see a doctor, right? First, doctor diagnose you. What sort of issues you are having, right? Usually, like in similar to that doctor's supervisions, right? So we are trying to diagnose what are the issues with regard to the particular institutions. So supervisions, number one principle is diagnostic, to identify and measure the risk, right? What are the issues with regard to the particular individual or particular bank? So that's the most important. Now, it's similar to doctor, right? Once you go to see the doctor, he will diagnose you to identify what are the sickness you are going to have, right? Then he will start the treatment. Treatment will be different. He will keep you for a certain period without giving the medications. He will supervise your activities, your behavior, how you are going to behave. Then he will prescribe sort of test or something like that to identify it further. And he will take the kind of preventive measures, spread of the particular disease. And if not, he will give the kind of full course of medical treatment. Likewise, the regulator, right? We also first identify diagnostic, that's to identify and measure the risk. So diagnostic, that's for the identify and measure the risk. How far you have gone, right? What are the issues with regard to the particular institutions? What are the issues with regard to the particular regulations and applications? That's what the diagnostic is most important. Then the monitoring. The monitoring. So monitoring means, in case of doctors, we know that, right? He will monitor you for a certain period too, without giving any kind of medication, or sometimes he will give some medication which are not help to cure your right sickness. But here what we are doing is, right, we track the development of identify risk. So now, for example, we take that, okay, now you are gradually experiencing the liquidity risk. That's easy to understand. Gradually you are experiencing the liquidity risk, right? It's a kind of risk. If I experience the liquidity risk day by day for a week, 2 weeks, 3 weeks, so for a month, meaning that's a critical factor. Being the regulator, right, we will try to identify this risk and we are trying to measure the risk, how far it has gone. Then we monitor it for a certain period to track the development of the identifier risk. We identify regulator, identify the right liquidity risk as a developments in the particular institutions, and we monitor the right development, how it developed, how far it has gone, what are the measures to be taken. That's the period of monitoring. Then we decide what are the preventive measures, not to go it worse, right? Not allow to move it toward the worst directions. So being the regulator, doctor, he will prescribe some medications, but in our case, right, as a supervisor, we try to limit or reduce identify the risk. If it is a liquidity risk, we try to limit it or reduce the particular risk, taking the certain measures. If not, so doctor will rectify you the kind of prescriptions, medicines to take for a long run. So likewise, supervisors also will respond to the risks that have materialized. So we identify the risk is the liquidity risk. We identify how it developed. We look for the limitations and how to limit the particular risk, right? So then we are taking the decision to, okay, right, how we are going to respond to it. Now see, in case of the liquidity risk, which I mentioned earlier also, so we are not allowing any bank to have a continuing liquidity risk. Why? It's not healthy for the particular banking institutions. I don't like to mention the particular bank, big bank, operate in our banking sector. It was experiencing liquidity risk for a long. So central bank supervision department diagnosed it. They experience the liquidity risk. That they monitor it, how far it has gone. As a preventive measures, they limit the borrowing from the outside and the giving from the central bank facilities. And finally, right, they say that, okay, you can't run the business like that. And they, right, limit all the banking activities of the particular banks. That's how they have taken the remedial measures, right? As a regulator of the banking sector, bank supervision department, they have a power to limit the business even. Limit the business and the limited activities. If a continuous experience the liquidity risk, central bank supervision department can you direct you to, okay, your operation should be limited within this particular volume. That's how they are trying to take the preventive measures. That's what the remedial measures are applied. When we talk about the method of supervisions, there are two types of supervisions. One is, everybody knows that one is the famous supervision method is on-site supervisions. On-site supervision. So that means regulator will visit the particular place or particular institution or particular branch. They will go through each and every documentary and process. They will go through the entire process, entire books and details physically. And physically they verify. That's what in simply we call it as a on-site supervision. The second aspect is off-site or desk-based supervisions. Off-site or desk-based supervisions. Supervisors, they don't visit to the particular institutions. They will collect the informations on periodically. That's mean weekly, 2 weekly, monthly, 6 month, quarterly, and semi-annually and annually. Based on the information submitted, they will check and balance your status of the particular institutions. Check the status of the particular institutions. But remember that most of the countries like ours, we also undertaking the on-site supervision rather than the off-site. But there are some off-site supervisions angle also for a certain period and certain transactions. What we have experienced is in a developed financial market, we have noticed that they are providing the actual informations, correct information. The banks are required to provide whatever the information required by the supervisor, but we have noticed that 100% accurate information are not provided by the particular institutions. There are some manipulative aspect also. That's what the certain now country like ours, we have a two-way approach. Two-way approach. So that means first we call upon the off-site informations and we review the desk-based supervision first. If you are not satisfied about the information provided by the particular bank or institutions, they will go for the on-site supervisions. Or otherwise, directly we will decide to go for the on-site, because if you are not satisfied about the activities of the particular institutions, that's what the issue we are facing right now. Those correctness of information are depending on the market information they received and the market development of the particular country. Even you may think that if you look at the country like USA and the UK, right? There are few big banks failure. Few big banks failure. So ultimately, I will take the example later on when we are talking about the financial crimes, right? One good example is Lehman Brothers, one of the big bank in the US, right? Then you see, if you carefully look at the situation of these particular banks, in case of off-site supervisions, the information they have provided to the regulator is not 100% accurate. Not 100% accurate. Some are partially accurate, some are not even partially accurate. Those are the raw numbers, the manipulative numbers they have provided. So because of that, now almost all the regulators tend to go for the on-site supervisions because of the collapse of the financial institutions, because of the ultimate blame will come to the regulator if they are not supervise those institutions correctly and properly. Because of that, now on-site supervisions are undertaken by each and every country because of that situations, because the non-submission of the accurate and correct informations. But still we call upon these information, off-site informations from these institutions to check the accuracy of the information they have submitted earlier, and to check the variation between the information they have provided earlier and now. Then we can get the kind of idea about whether they have submitted the accurate information earlier or there are manipulated information now. Based on that, we can decide to go for the on-site examinations later on. Because of that, we also not highly depend, but depend on the off-site informations supervision methods. Not 100%. Remember that. That's how. Then the on-site supervision, as I mentioned, you visit by the regulator to the particular office or the entity or institutions. Might be team headed by the senior regulator. They will visit to the particular office or branch or entity or institutions and verify whatever the record, transactions, IT platform, which are relevant to regulatory authority and the supervision purpose. Right? Remember that once the regulator visits over there, particular institutions are they are bound to provide whatever the informations they are required. Perhaps the regulator may not ask in the original documents. You will be subject to provide all the certificates, certified copies on the document they have required. That's the important, right? You can't say report is not there, copies are not there, you can get it tomorrow, something like that. That means you are not properly organized your institutions. That's what, right? So whatever the information and document required by the regulator, you must be in a position to provide all the document. There are some practical difficulties. Some banks now say that we have archived all the documents. That is in a different place. Will take more time to collect those informations. Yes, we know that transaction volume might increase. You cannot keep all the documents in one particular place. You can have archives to keep those documents. So in that scenario, within a reasonable period, bank or particular institute should be able to provide copies of the original document to the regulator. Reasonable time, which are judged by the regulator. If you are taking the more and more time, you will break the trust between the regulator and you. Why? It might be sometimes we may have understanding about you are not willing to provide that documents. Or others, we might think that you don't have that documents. Right? Don't go for that aspect. That's what visit by the regulator to the office of the entity and institutions, depending on the circumstances and situations. Right. Off-site desk-based supervisions, as I mentioned earlier, institution or entity or branch to provide relevant information which are required by the regulator, and sometimes the regulator may prepare the supervisory return or form as prescribed within the legislation or the license conditions. Whatever the regulations, law prescribed by the regulator, they will prepare the certain supervisory return for you to send it back after fulfilling the requirements. Your obligation to fill it and send it back within a time frame, prescribed time given by the regulator. So that's your duty. We always, being the regulator, we always encourage and expect you provide 100% accurate information. That's what the important part. Remember that being the regulator, your responsibility is to provide 100% accurate information. When we discuss the FIU operations and their supervision aspect, if you are not providing 100% accurate information, direct FIU has power to take the actions against the particular bank and the senior management. That's the scenario. That's what I'm always highlighting, right? You must provide 100% accurate information. Sometime you may later on understand that information you have provided is not accurate or misleading or something missed by you all. But as soon as possible, you must correct it to the regulator. If you are taking to correct that things mean you willfully neglected particular informations. That also can be taken into various kind of punishment by the regulator. Remember that aspect. I hope that you can follow me. Right. Then we'll go to the enforcement. Enforcement means whatever the regulatory process are completed, right? Regulatory process is completed, the outcome of that. So in a right nutshell, we can say that outcome of the process of authorization and supervisions, right? We have discussed what the authorization mean, and so far we have discussed what the supervisions mean. The enforcement is the outcome of both. Outcome of both. So that means, so we look into closely whether you have violated authorized condition of authorizations and whether you have violated through the supervision. We trying to check and balance whether you have violated any rules, regulation, and laws relating to the particular business, supervisory actions. So that's what the enforcement, we simply call that outcome of a process of authorization and supervisions, right? Based on that, regulator empowered to take various kind of action, which include penalty as well as the go for the court proceedings, right? Then the enforcement, how supervisor empowered to take the enforcement actions. Now there are few scenarios on that. How the particular institution, how the supervisors, regulators undertake enforcement actions. That's the number one, basically famous one is Basel Committee Core Principle for Bank Supervisions, Principle 23. There are so many principles with regard to the bank supervisions. Principle 23 discussed about the enforcement, right? So here they clearly explain that bank supervisors must have at their disposal adequate supervisory measures to bring about timely corrective actions. Remember that banking supervisors must have, not might have, at their disposal adequate supervisory measures to bring about timely corrective measures. So that means supervisors must have, right, corrective measures, right, take the timely corrective action. If it is not timely, mean if the regulator may fail, mean, right, the particular institution may be damaged or destroyed. That's what the meaning of that. Bank supervisor must have at their disposal adequate supervisory measures to bring about timely corrective measures. Timely corrective measures, right? If it is too late, mean it won't be a corrective measures. This include the ability, where the appropriate, to revoke the banking license or to recommend its revocation when banks fail to meet prudential requirements, right? Such as minimum capital adequacy ratio, when there are regulatory violations or where depositors are threatened in any other way. They thus cover the entire banking business. These include the ability, where appropriate, to revoke the banking license, right? Permission given to the operate the particular bank. That include mainly, right, supervisory measures, actions. This include the ability to, where appropriate, to revoke the banking license, cancel the banking license, or to recommend its revocations when banks are failed to meet prudential requirements, or if the regulator doesn't have power to revoke or cancel the license, otherwise they should have a power to recommend it to the appropriate authority to cancel the license, right? If they are not meeting the right regulatory requirements such as prudential requirements such as minimum capital adequacy ratio. So that means minimum capital requirement, right? Adequacy, right? When there are regulatory violations or where depositors are threatened in any other way, right? So as I'll show you what are the minimum capital requirement of the commercial bank in our country. Each and every bank should maintain this minimum capital requirement. If they are not maintaining this minimum capital requirement, the regulator can take the actions, right? And sometimes there are some issues with regard to that. Banks are threatening the customers, okay, we are not going to give you deposits. We need this much of time, right? That's what we are here. We are meaning by threatened by other way, right? Something, you know that being the deposit of the particular banks, right? You have a right to withdraw this money in a particular time. In case of current account, whatever the amount you deposit today, you are eligible to withdraw this money tomorrow. Or even morning deposit, you are eligible to withdraw it in the evening, right? If it is a fixed deposit, right? If it is a fixed deposit, you are also eligible to withdraw this fixed deposit, but subject to the certain reasonable time period given to the banks, right? The banks are to be ready with that money, because if they are taking these FDs, they are tend to keep this money in investment purpose. In that sense, we should be given, customer should be given, bank should be given reasonable time to get this ready with this money. That's what, right? So giving this certain time. Now, you know that in case of FD, banks are telling the customers, okay, if you want to withdraw this money, at least give us 2 or 3 days, right? That's the kind of issue, right? Here we are referring, right? You cannot violate, or otherwise you cannot threat the customer saying that, okay, you haven't given us the reasonable time to withdraw this money. Being the customer or depositors, anytime we can withdraw the money, because those money are ours, depositors' money. Because of that, right, they have a right to withdraw this money as they wish. Okay, so this is the bank supervision practice on enforcement by the Basel Committee. We discussed what the Basel Committee is, right, in our first lesson. Right. Then FAT of recommendations 29, Financial Action Task Force, right? Recommendation 29, right? It also, these recommendations implemented through the Financial Intelligence Unit. Here they mention supervisors should have adequate power to monitor and ensure compliance, right? They strictly say that supervisors mean whether it's a bank supervisor or FIU supervisors, FIUs, right? They should have adequate power to monitor and ensure the compliance. Oh, I'm sorry, one thing I forgot. Now here, right? Yeah, I have to mention that one thing over there, right? This includes the ability and where appropriate to revoke banking license or recommend it revocation when the banks fail to meet the prudential requirement. Yeah, I just don't forget to tell you, in a central bank, in our central bank, even though banks are supervised by the bank supervision department, director bank supervision, he or she doesn't have power to revoke the license, right? She or she should make a recommendation to the, right, cancellation of the license, revoking the license to the monetary board of the central bank. Then the decision will be taken by the monetary board to cancel or revoke the license. That's what I forgot to tell you. But there are some countries, right, director bank supervision or bank supervision regulator, he or she himself have a power to cancel the bank regulation. But in our context, that cancellations, approval, cancellation and revocation powers of the banking institutions are vested with the monetary board of the central bank. Right. Recommendation 29 of the Financial Action Task Force. Here they clearly mention that supervisor should have adequate power to monitor and ensure compliance. Otherwise, no point we are having the compliance. Right? They should be powered, supervisors should be powered to monitor and ensure compliance. Otherwise, no point we are having the supervisors, regulators. They should be authorized to compel production of any information relevant to the monitoring such compliance and to impose adequate administrative sanctions for failure to comply of such requests. Now remember that this recommendation is much powerful than the earlier Basel recommendations. Look at it again, right? Banking supervisors must have at their disposal adequate supervisory measures to bring about timely corrective actions. These include ability where appropriate, right, to revoke the banking license or to recommend its, right, revocations when the banks fail to meet the prudential requirement, such as minimum capital adequacy ratio, when there are regulatory violations, or where depositors are threatened in any other way. So that means they are not 100% authorized to do it. But if you look at here, right, supervisors should have adequate power to monitor and ensure compliance. The recommendation 29 of the Financial Action Task Force, supervisors mean financial intelligence units. The law relating to the financial intelligence unit must be clearly explained that FIU should have adequate power to monitor and ensure compliance. They should be, that means the FIU should be authorized to compel production of any informations relevant to monitoring such compliance and to impose adequate administrative sanction for failure to comply with such request. Right? Again, I just want to highlight one fact over here. Right? Being the FIU operations, FIU is empowered to take the actions against the financial institutions, right? And to get the support of the relevant regulator of the particular financial sector. If they need to, right, supervise or judge or measure the level of compliance, right? One hand, FIU can directly visit the banks or financial institute to check their level of compliance. And on the other hand, they can direct to the particular regulator, director bank supervision or director non-bank supervision to, right, undertake the supervision actions on behalf of the FIU, right? That's how the recommendation 29 was specified. So that means more power than the bank supervisors, right? Then enforcement steps under that scenario. So that means now we have learned Basel Committee and FATF recommendations. Under that, there are enforcement steps. One is inspections, then investigations, monitoring, intervention, and imposition of penalties or some other action. actions. Okay, let's see. Now, inspections again. Sometimes we call it as a supervisions, right? But here, inspections are more than the supervisions. Right after the supervisions, if they find out, right, things to be more details, right, things to be undertaken more details inspections, they will again visit to clarify it. Now these, for example, on-site examinations, they will look at the overall scenario. Once they come back to the office, they will discuss and find out there should be more micro level supervisions on that. They will go and look at the particular sector, particular accounts. That's we call inspections. The limited scale supervisions, right? Now for again, let's see. Now we have checked the bank branch operations. There are 1,000 accounts over there, right? Out of these 1,000 accounts, being the regulator, we have identified 10 accounts were suspicious. 10 accounts were suspicious. So now again, they can go and check, right, more closely inspections on that and start the investigation on the fund transfer of that particular accounts. Investigation of the particular accounts. And they keep the certain period by vigilantly monitoring it, right? If they have a certain doubt on that, if they find out those accounts transacting the particular accounts are seriously violating the regulations, immediately they can take the actions. But otherwise, if you think that it's very difficult to understand the transaction of the particular account, they can keep those account in monitoring process. Whenever transactions are, right, moving toward that directions, right, supervisors, regulator can intervene of the particular accounts, right? What is happening over there? Then, right after following those steps, right, steps, if they find out the wrong thing, bad thing, illegal things are happening through this particular account, they can take the actions, imposition of the action relating to the particular accounts. Maybe a penalty, right? Or maybe more than that. That's what the enforcement based on that two scenario, right? Then we look at the power of the regulator and overall based on these two scenario, FATF and Basel Committee. Overall implies that power to monitor the progress of the implementation improvement, right? Both are empowered to, right, monitor the progress of the implementations. Both are. Then the take action if not satisfactorily completed, right? Then the both regulators are empowered to take the actions if they are not satisfactory on the implementation or complementations, right? Completed actions. That's what the lesson learned be from these two. Then we'll talk about the how they are going to take the actions. How they are going to actions. Now, once we go for the inspections or supervisions, if they find out the kind of violations over there, right, they won't take the actions, but they want to further request it, further investigate it, right? To justify it, they can call upon the further information to justify it, confirm it, right? Further information to confirm it, right? So, if they confirm it, whether those criminal things are happening in a particular account or particular branch or particular banks, right? They will decide to impose the sanction or impose the sanctions by the regulator or to seek orders from the court or tribunals. If they think that, right, sanctions are enough to control these violations, the regulator can impose the certain sanctions on that. Or otherwise, sanction might be limit the operations, impose of the penalties, hiring and firing of the senior management or change of that, right? Or otherwise, right, to seek the orders from the court or tribunal, right? So they can ask for the court orders, right? Court orders or tribunal, labor tribunal or something like that. There are directions on that. Or otherwise, they can directly refer this matter to criminal prosecutions, right? Through their lawyers, they can go for the prosecution's activities, right? It may end up with the winding activities, right? Or till then, sometime they will suspend the operations. They will suspend the operations. That's how these finance company business are, right, regulated by the central bank. What the central bank did for a few finance companies last couple of years is, right, there are some irregularities of these financial institutions, right? They closely monitor it. Then they change the management, team of the management, right? Then they supervise this, monitor it closely. Then even under that situation, they haven't seen any improvement on that. Then what they have done is they close the operations, right? Then later on, they got the liquidation activities to the court proceeding. That's how those steps are clearly mentioned, right? Those steps are clearly mentioned. If you look at the practical scenario in our country, the finance company liquidation is the most good example on that, right? Regulator, being the regulator non-bank supervision department, they identify the sickness, weaknesses, and irregularity of the particular financial institutions. Then they issue the certain rules and regulation to manage and control it. And sometimes they change the senior management and ask them to operate the particular institutions. That is one also not correct, right? When in a good manner, then they suspend the operation of the particular finance company. Even that was not completed, they will go for the winding up liquidation process. That's how these processes are moving up in the finance companies, but it's not happening in the banking sector so far, except the one bank, right? Then those are the regulators' purview, right? Now I just want to talk about the central bank purview. How the central bank regulate financial institutions, which way? What is the power? Central bank regulators, right? That's more being the Sri Lankan banking institution, financial institutions. This might be most important for you to know those things, right? So central bank purview, right? So supervision of the banks is come under the central bank purview. Supervisory authorities, bank supervision department, right? Supervision of bank come under the central bank. There are two governing laws. One is Monetary Law Act, which create the central bank. The second one is Banking Act, which, right, regulate all the banking institutions. The responsible department of the central bank is Bank Supervision Department. Everybody knows it, I believe, right? Then the finance companies, right? That's also come under the central bank, right? Law relating to the finance business regulation is Finance Business Act. The responsible department is Non-Bank Financial Institution Supervision Department. Non-Bank Financial Institution Supervision Department. Why this non-bank? Right? Why this non-bank? Here we are talking about the finance companies. Those are not banks, right? Apart from that, right, all these finance companies are come under these institutions. But 2 years ago, just to mention over here, they are also supervised with regard to the primary dealers. Primary dealers mean those who are come under the public debt department, right? Public debt department, they are supervised aspect also transferred to this particular department, just to mention you over there, right? Then the finance leasing establishment, leasing companies. The regulatory environment, sorry, there's a law related to that is Finance Leasing Act. Again, responsible department is non-bank financial institution supervision department, same department. Then the primary dealers, there are 2 enactment on that. Local Treasury Bill Ordinance, Registered Stock and Securities Ordinance. So remember that I talked about the laws and ordinance, right? Here I talk about the acts, right? Acts are very latest one. Those ordinances are all done. What mean? Those are the laws approved during the British period, right? That's what it become ordinance, right? King or Queen's ordinance, they are orders. That's become a law, right? Local Treasury Bill Ordinance and Registered Stock and Securities Ordinance those are passed by the British period. The responsible relating to the supervision of those institutions are, as I mentioned earlier, come under the non-bank institution supervision department. The authorized money changers. Who are the money changers? Who are the money changers? Can anybody
Those
tell me?
who are dealing with foreign currencies.
Yes, dealing with foreign currencies, but here in the Sri Lanka context, money changes are authorized only to buy the foreign currency, right? They cannot sell the foreign currency, right? If they are selling the foreign currency, mean those are go, right? What they are doing is, right? What they are doing is, right? They are doing the illegal activity. But anyway, right? Even though they are authorized to change the foreign currency, buy the foreign currency, but some of those people are illegally selling this foreign currency, right? To monitor those activities, there are 2 enactments which we had. Early we had Exchange Control Act, but later on it became since 2007 it became a Foreign Exchange Act, right? Foreign Exchange Act. Then the Exchange Control Department of the Central Bank became a Foreign Exchange Department. Make a change of that, right? Early it was Exchange Control Department. Under the Exchange Control Act, the authorized money changes are monitored by the Exchange Control. Authorized money changes under the Exchange Control Act, monitored by the Exchange Control Department. Right after the Foreign Exchange Act, money changes are monitored by the Foreign Exchange Department. Foreign Exchange Department. Make that corrections over there. Responsible Exchange Control Department, Foreign Exchange Department. But now we don't have Foreign Exchange Control Act and Exchange Control Department. So now we are having the Foreign Exchange Act and Foreign Exchange Department. Right. Then the Central Bank purview continue. Overall KYC related to the bank and non-banking institutions, right? Financial Transaction Reporting Act, Prevention of Money Laundering Act, and Convention of Suspension of Terrorist Financing Act. Responsible for Financial Intelligence Unit. Yeah, you have to say one word on that. Even though FIU is come under the Central Bank purview right now, is work as independent institutions, right? That's what we call it as a Financial Intelligence Unit of Sri Lanka, right? Which is established under the Minister of Finance. Later on, it's come under the Central Bank purview for the budgetary purpose. There were 3 enactments: Financial Transaction Reporting Act, Prevention of Money Laundering Act, PMLA, Convention of Suspension of Terrorist Financing Act, right? They are working on the overall KYC related to bank and non-bank financial institutions, but the scope is much more wider than the financial institution. Now they are going for the non-financial institutions as well. When I'm talking about the FI operation, I will explain what are the sectors now they are covering over here. But here I just want to mention, if it is a financial related business, also come under the FIU, right? Supervisions and regulations. Then the Payment and Settlement Department, which is come under the central bank, right? They monitor payment and settlement system. Payment and settlement system, and the act is Payment and Settlement System Act, right? So the responsible department is Payment and Settlement Department of the central bank, right? So you know that these bank-to-bank transactions, international transactions, those are right monitored by this particular department, right? Payment and Settlement Department. Then in addition to the central bank is a country like our central bank is the biggest regulator. In addition to that, there are a few regulators. There are a few regulators in this country, right? There are a few regulators in this country. Securities and Exchange Commissions, right? Securities and Exchange Commissions. What those people are doing? Securities and Exchange Commission, what they are doing?
They're regulating the capital market. They're regulating the capital market.
Capital market, what are the institutions they are monitoring? What are the institutions they are monitoring?
Colombo, stockbroker institution.
Binary dealers.
Yes, that's right. They are monitoring stockbrokers, right? They are monitoring stockbrokers, right? Stockbrokers and other related institutions. There are some venture capital companies also, but not that much of in bigger way. Security Exchange Commissions, right? Then the Colombo Stock Exchange. Colombo Stock Exchange. They are also monitor these securities institutions, right? The Security Exchange Commissions and Stock Exchange are even though those are 2 different institutions, right? Those 2 institutions monitoring the same institutional framework. That's right. Colombo Stock Exchange is the people who manage the stock exchange. That's a Security Exchange Commission is the regulatory authority which come under the, right, these securities and exchange, all the securities institutions. The brokers, venture capital, and those what you call that. There are some institution called what you call that. This come under bank now, not venture capital. I'll tell you later on, right?
Unit trust.
Yes, that's right. Unit trust also come under that, right? Then the Cooperative Development Department. Can it be? What the Cooperative Development Department do? Any idea?
Regulate cooperative banks.
Yes, very good, very good. Right? Now remember that, right? Remember that central bank regulate only the commercial bank and specialized bank. Right? In addition to that, there are so many banks in Sri Lanka. Right? One is cooperative banks. Cooperative banks. Even though their base is, compared to the commercial banks, their share is not that much, right? You know, the base is huge. They have large customer base. So this Cooperative Service Department, Cooperative Development Department, right? They will monitor, regulate these cooperative banks, right? cooperative banks, right? Cooperative banks monitored by those institutions. But in addition to that, there are one segment of bank we call Samurdhi Bank, right? Samurdhi Bank. Who regulate those banks? Samurdhi Authority, right? Samurdhi Authority. Right? There are also proposal to bring those Samurdhi Bank to central bank purview, but ultimately central bank didn't agree on that. Why? The base of these banks are almost rural compared to the share of the commercial bank and specialized bank, right? Those are not that much, right? Valuable for the financial sector. But only one thing is their base is so big. Customer base is so big. Base is big. Right? If you look at the cooperative bank, members of the cooperatives, they are the deposit holder of this particular banks. And right? And they don't have much of the big deposits. Not big deposits. Right? Now remember that very latest we have found that there are some people, those who are going and deposit the money in these cooperative banks. Big deposits. Right? Why is that? Because those banks are not monitored by the central bank. Right? And they don't have much of the KYC. Because of that, these criminal guys are depositing the money in this cooperative bank. So now FIU in the process of monitoring those bank assets. Right. That's right. Legal earn money. Now there's a trend of depositing this money in these particular banks. Right? Nobody going to supervise it. Corporate department is not that much of strong. They are not looking at the source of the money and KYC. Because of that, there's a trend of depositing huge money in these particular banks as well. Now, corporate development. Now, Insurance Board of Sri Lanka now it's become a what you call that? Not Insurance Board. Now we say that regulator. Yes, Insurance Regulatory Authority. Insurance Regulatory Authority. They have changed their name very recently. Remember that Insurance Board of Sri Lanka become Insurance Regulatory Authority now. Please make a note on that. Insurance Regulatory Authority. Right. In addition to those things, can you find out any kind of regulators in the financial sector? Financial sector? Right? Now see, I'm sorry?
Institute of Chartered Accountants?
No, though that is not the financial regulator, right? They are regulating the kind of set of institutions, my dear, right? I'm just talking about the institution regulate the financial institutions. Financial institution mean those who are providing the financial services, right? Chartered institution not providing the financial services, but if you look at the FIU operations, those are become right non-financial institution and professions. They are come under the FIU supervisions. That's a different angle, right? So basically in a Sri Lankan context, but you know that other country like developed countries like that, there are a lot of institutions coming to the financial sector, right? There are venture capital companies, big venture capital companies, right? there are a lot of institutions come under that. But in our case, we don't have much of the financial institutions, right? In our country, that's what we have limited those kind of regulatory framework in Sri Lanka, right? Now, regulatory and supervisory framework of licensed bank in Sri Lanka. Now, remember that, yeah, I have mentioned that one word called licensed bank in Sri Lanka. Licensed bank. Right, why it's become a license? Right, we call licensed bank. Licensed by whom?
Central Bank.
Yes, yes. Remember that according to our law, Banking Act, nobody can open the banks without securing the permission license from the central bank. Right? That's what we call licensed bank. Licensed bank. Licensed bank. Under this licensed bank category, there are two types of banks. We'll explain. Licensed commercial banks, and the licensed specialized bank. Specialized bank. There are two categories, right? Licensed bank, licensed commercial banks, and licensed specialized bank. For the moment, remember that commercial bank, everybody knows that they are permitted to undertake commercial operations, commercial banking, right? Specialized for the specific purpose, right? That's the difference between those two types of bank. Remember it, we will discuss it further, how they are going to differentiate, right? In ours, under this Sri Lankan category, we are going to discuss all of the banking sector, role of our regulator, and what will be the regulatory framework. Sri Lankan regulatory framework, role of our bank supervisor, and the banking sector, how it consists. What will be the institution come under the banking sector, right? Banking sector, banking business can be carried on only under the authority of the license issued by the Monetary Board with the approval of the minister concerned. Minister concerned means Minister of Finance. But here, why I have mentioned the minister concerned? Right? Because some time back, usually central bank is come under the Minister of Finance. So if that's a minister concerned, it's not matter because minister is finance minister. But sometime there are also changes of that. Central bank is not come under the Minister of Finance. Come under the different ministers. Huh? Don't ask the answer for that one. Right? So that's what the concerned minister. But usually, in any country, central bank come under the Minister of Finance. Right? Banking business can be carried out only under the authority of license given by the Monetary Board. Monetary Board is the central bank supreme board, right? They are the people who take in the policy decision of the central bank, right? So they are the people who authorize to give the banking license. Then the banking license should be approved by the Minister of Finance. That's what the concerned minister, right? License can be issued by the Monetary Board subject to the approval of the Minister of Finance. Other than that, nobody can operate the banking business without license from the Minister of Finance and without approval of the Monetary Board. Right? Without approval of the Monetary Board. As I mentioned you, there are two types of banking institutions: licensed commercial bank, LCB, and the licensed specialized bank. Licensed specialized bank. Right? Commercial bank and the specialized bank. Right. So how are they going to regulate? As I told you, banks and specialized banks, commercial banks and specialized banks are regulated by CBSL, SL. Power is vested in the bank supervision department, BSD, right? They are the people who, right, regulate and supervise to the, right, report to the monetary board of the CBSL. Right. Okay. Then how they are going to regulate it? Regulated and annually examined by the Bank Supervision Department of the Central Bank of Sri Lanka. There are annual examinations. Annual examinations. Right? Annual examinations. There are off-site and on-site supervisions. The banks are required to send some periodic report to the Bank Supervision Department. In addition to that, team of the Bank Supervision Department will visit the particular banks to check the right accuracy of that. And otherwise, they go for the on-site examinations. That's annual. All domestic banks are required to be listed in the Colombo Stock Exchange. That's the one condition which I imposed in the mid of 2000, say about 2012 or something like that. Now it's become a law. All the commercial banks are required to be listed in the stock exchange. It should be a public limited liability company now, not a private company. Right? All the bank. Now you may have a question about that. Bank Australia is not listed in stock exchange. People's Bank is not listed in stock exchange. Why is that?
Those are government banks.
Those are government bank and owned by the public. So government bank mainly owned by the public. Because of those reasons, those banks are not required to go for the Colombo Stock Exchange. Right. Then the required to maintain the minimum capital. This is the minimum capital requirement, right? And this is the minimal capital requirement. They always requested to maintain this minimum capital requirement. Licensed commercial bank 10 billion rupees. Licensed specialized bank and foreign banks. Foreign banks mean, or not the foreign banks, branch of the foreign banks are required to maintain rupees 5 billion. Half of that. Right? Half of that. Right. Then the pay an annual fee of rupees 2.2 million to 30 million, depending on the asset base of the bank. So they have to pay licensing fee. They're ranging from the 2.2 million to 30 million. Right? 2.2 million to 30 million. That's depending on their asset base. Their asset base means if the asset base of the banks are increasing, right, they have to pay based on that. They have to based on that. So another condition is now those banks should be rated by the right acceptable rating agency, Fitch or Moody or something like that. They will rate these banks and give the ratings. That's what the requirement in the Sri Lanka context now. Right. Remember that composition of the bank is like we have 32 banks, 26, right? Commercial bank, licensed commercial bank, 13 domestic, foreign 13, right? Then licensed specialized, 6 licensed specialized bank. Remember that those numbers as at 31st March 2019. I haven't updated these numbers because the central bank annual report are not published yet. 2020 annual will not publish, right? So remember that under the foreign banks category, two banks are suspended their operations in Sri Lanka right now. One is Axis Bank, then another one is ICICI Banks. Due to that reason, foreign banks should be 11 now. Right? Okay. So this is the good this is the illustration of that composition of the banking sector category as at 31st 12/2019. Once become a 2020, right? Foreign banks should be 11, right? Total number of licensed commercial bank 26. 26 consists of domestic banks 13, foreign banks 13, right? Then the total number of licensed specialized banks 6, right? Then the bank branch, commercial bank branch as of December 31st, 2019, we have 6,690 bank branch. The total number of branch of the licensed specialized bank 697, close to 700, right? Then composition of the banking sector again, right? Licensed bank account for 60% of the total asset of the financial system in Sri Lanka. That's the most important word, right? If you look at all the financial system, which include all the financial institutions, leasing, finance companies, banks, all those things are come together. Licensed banks account for 62% of the total assets. So that means our banking sector operation is more than the other operations. Out of that, State Bank account for 52% of the total asset. So that means still state banks are dominating our market. More than 50% of the assets. Assets mean banking sector assets, not the financial sector asset, right? More than 52% of the total asset of the banking sector are dominated by the state banks. Then the foreign banks account for 10% of the total asset of the banking sector, right? Foreign banks account for 10% of the total assets. So that means presence of the foreign banks is not that much of strong. What it signal for us? What it signal for us?
We might not be able to attract more foreign banks due to certain restrictions or certain other
yes.
issues.
You are correct, but not due to the restrictions, right? That's, you know, that because of the size of the economy, right? If you have more economy, we can expand in economy, foreign banks are trying to come over here, right? Now, don't say that, don't mention anything over here, that, you know, that we, in myself, I made a kind of assessment about these two bank branch, foreign bank branch, who closed down their business operations over here, right? ISIS Bank and this Axis Bank, right? So they are not in a position to grab the market share. The expected share of the market were not secured by these two banks, but still our people are tend to do the banking in the local banks, right? And due to the traditional approach of our system, financial system and our society, people don't want to go to the foreign banks. Still they are trusting the local banks, especially two government banks. Now look at the deposit number of accounts maintained by the People's Bank and Bank of Sri Lanka, right? That indicate that people still trust the government sector banks, and they also believe that if something goes wrong, those government banks will compensate their depositors. That's what the expectations. That's what the foreign banks are not much interest to come in that in our economy, because the market share, economic expansion and economy is so small. They don't have much activities over here. And the two state banks are dominating the market. As the tradition of people are tend to do the banking with the government sector banks, right? Then we look at the difference between licensed commercial bank LSBs. What is the difference? We are talking about the commercial bank and licensed banks. What are the difference? Right? There are few differences over here. Right? Only in licensed commercial banks are permitted to accept demand deposit from the public and be appointed as an authorized dealer in foreign exchange. Right? Only the commercial banks are authorized to accept the demand deposit. They are permitted to keep the current accounts from the public and can be appointed as an authorized dealer in foreign exchange. That second part now bit of change. Right? The second part now bit of change. That's what I just told. Earlier, only the commercial banks are permitted to undertake demand deposit current account and right work as a money changing business. But now, specialized bank also allowed to undertake this foreign exchange business. Right? Now see, for example, NSB. NSB authorized to open the foreign currency accounts. Likewise, there are some deviation between these rules. That's what I just want to highlight over here. Right? Even though when we are talking about the licensed bank and specialized bank, those are the difference. But now there are some deviation between those standards. Right? So LSBs are mainly savings and development banks. Licensed specialized bank, those are mainly service bank and development banks. Right? Early it was funded by the government, treasury funded. Now they are allowed to mobilize the deposit as well. Right? Now see, HDFC, SMIB, earlier those are funded by the government. Now they are allowed to accept the deposits. Right? That's the difference. Only difference now when we are comparing the commercial bank and LSBs, only difference right now is those specialized banks are not allowed to open the current accounts. That's all. Right? And LSBs is permitted to engage in limited activities in foreign exchange with the central bank approval. Right? Which I mentioned you, specialized banks are permitted to engage in limited activities in foreign exchange with the central bank approval, foreign exchange department foreign exchange approval. Right? That's what. Those are not bigger way, but NSBs are allowed to undertake this business because of the worker remittance. Most of the workers are trying to remit this money to NSB because that particular institution have a rural base. Right? They can operate it through the post office. That's what. So by going through these things, right, I just want to highlight the role of the central bank as well. Right? So if you look at those regulatory arms of the central bank, if you summarize all those things, role of the central bank can be highlighted as like this. Central bank is the authority responsible for, right? Responsible for administration, supervision, and regulation of three things. One is monetary systems, another one is financial system, another one is payment system. All those three things are administrative, supervisions, and regulations. All these things are done by the central bank. That's what I'm telling that central bank is the biggest regulator, right? Legal framework for bank supervision in Sri Lanka, right? As I mentioned you earlier, Monetary Law Act number 58 of 1949. Later on, that has been amended several times. In the Banking Act number 30 of 1988, as amended later on. Here, those are the original statute I am mentioning. In addition to that, central bank empowered to undertake various activities right? Exchange Control Act number 24 1953 or Foreign Exchange Act number, I have not mentioned it over here, right? Then the Financial Transaction Reporting Act number, Foreign Exchange Act number, that's missing anyway. Financial Transaction Reporting Act number 6 of 2006, Payment and Settlement System Act number 20 of 2005, right? Those are the other statutes in addition to the Monetary Law Act and Banking Act, right? Overall supervisions. Then just want to highlight about the importance of the supervisions, right? Important supervision of the bank. I'm highlighting John Nexter. View of the John Nexter. Who is the John Nexter?
He was the founder of the Central Bank of Sri Lanka.
Yes, and the first governor.
Initiator.
Yes, he's the creator of the Monetary Law Act and the first governor of the central bank, right? So in 1948, when the central bank, central bank is established, main objective was to supervise the banking institutions and monetary system. So according to his view, right, so banks should be supervised, right, because of few reasons. One is contributing to the soundness of the banking system. If you are not supervised, central banks are not supervising the banking business, right, it may not be a sound financial system, banking system of the country, right? Because of that, he expected bank to be regulated by the central bank. The second thought was to help to protect the public welfare, right? Protect the public welfare through the banking business, right? Then the essential to the economic development. How it helped to the economic development? If we have a good banking institutions, that will help to the economic development by way of contribution to that. Because of that, we need to supervise the banking institutions. Then to protect the public against the mismanagement, bank failure, loss of confidence in the banking system. Again, he talked about right, protect the public. We must protect the public against the mismanagement of the banking business, bank failures, loss of the confidence of the banking system while regulating the banking business. Because of that, he wanted to establish the bank supervision department, the central bank, at the initial stage of the establishment of the central bank. Then he helped to protect the depositors and stockholders against the loss. There are two types of segment. One is to protect the depositors of the bank. The second category is investors or stakeholders of the particular banks. We must protect them, otherwise we cannot have a banking business in this country. That's what. Okay, right. So objective of the bank supervisions, as he highlighted in the Monetary Law Act, to ascertain the true condition of the affairs of the bank, right? Expectation was to ascertain the true conditions, correct fit of the affairs of the particular banks. That's what the supervision is undertaking. Then the second point is, as per the John Nexter, whether the bank is insolvent or is like to become unable to meet the demand of the depositors. In advance, through the supervisions, central bank may understand that whether this particular bank is insolvent or, right, like to come to be unable to meet the demand of the depositors, right, meet the liabilities of the depositors, right? That's what the close supervisions are required. Then the objective of the bank supervision, again, as for him, mitigating the risk in the banking sector, mitigating the risk of the banking sector. Mitigating means you can't eradicate, right? But to certain extent, you can mitigate the risk in line with the banking sector, associated with the banking sector. In order to ensure the safety and soundness of the banking system, if the regulators are there, right, banks know that they are regulated, they are monitoring, they are watching their activities. Because of that, Supervisions are required to ensure safety and soundness of the banking system. Safety first and the soundness, right? Two different scenarios here: safety of the depositors and investors and the banking institutions, and the soundness of the financial system, banking system. Thereby preserving the financial system stability. If the banks be in the upset, if they are not stability institutions, the financial system may be in unable, right? They may not in a stability scenario. They also become instability. Because of that, John Nexter thought that the key things is the right stability of the banking business to keep the financial system stability. You know that if something goes wrong with the banking institutions, the financial system also will be collapsed. At the first lesson we talked about that's Greece. What happened in Greece? Bank failures led to the right financial system instability. The Europe, bank failure, right, lead to right financial system stability. In the American economy, big bank failure create the instability in the financial market. So likewise, the banks are major pillars of the financial system stability. Right. So as for the regulatory framework he identified, essential component is for the regulatory framework. What are those? Licensing of banks, they should license. Then the capital adequacy, right? There should be corporate governance mechanism. Then the enterprise risk management framework, licensing process, capital adequacy, corporate governance, risk management, enterprise risk management framework, right? Licenses of bank, we discussed lengthily of that, right? So licensing of the bank, there different countries have different procedures. In our country, they have to pay, right, licensing fee and secure the license. License will be issued by the Monetary Board of Central Bank. And they have to maintain the capital adequacy in line with the Basel Agreement. So now we are following Basel III, and the last year we talked about the Basel IV conditions. Because of this Corona pandemic, Basel IV proposal were postponed, but perhaps by 2021, we have to impose the Basel IV conditions as well. In that sense, capital adequacy may be different from the today's context. And the corporate governance, right? Corporate governance, which I explained a bit of earlier, right? How to manage the institutions. What to do with the board? What are their qualifications, right? How their activities, how CEOs appointed, what is the difference between CEOs and board, what is the demarcation of their authorities and powers, like that. Under these corporate governance, they are talking various aspects, right? That's what the corporate governance framework. Then the risk management, which we talk, right? What are the risks associated with the particular institutions, how we are going to manage it, what are the importance of the compliance officials, how they train, what are the job of the particular people to manage the risk. Then the essential risk component as per the him, what is that? Essential credit risk management, liquidity risk management, market risk management, operational risk management, right? Essential component of the banking sector risk. What is this credit risk management? Credit. What is credit risk management? Why credit become a risk?
Certain amount of facilities you lend may go wrong or bad due to mishandling or...
Yes, might be mishandling or sometime failure of the project, right? So now, giving the credit and advance, This is the way of getting the income to the banks, right? Income to the banks. Right. So before you give the credit and advance, you must have a accurate assessment about the particular firm or individual assessment. If your assessments go wrong, right? The income you expected might be wrong. Right? Going down. That's one scenario. Then you may have a risk. Even you are 100% perfect in every aspect. Your credit assessment is okay, he's a good customer, he's doing well, but pandemic situation like this, right? Your credit might be, right, risky. That's why the central bank come as a middleman and try to give the compensation for the commercial banks and the particular entrepreneurs to run the business. Right? Rehabilitation of the loan. Remember? Rehabilitation of the loan at the 4% interest rate. That's why. So, credit is most important because it will generate income for you. The credit is major component of the operation of the banks. Then the liquidity risk management, which I mentioned several times, you have to manage the liquidity. The liquidity is essential to run the day-to-day business of the banks. Then the market risk management. What are the market risks? Right, market risk. Market risk. That's depending on the local market as well as domestic market. Right? Depending on the market conditions, you may have a risk. Right? Now remember, we had an open economic policy some time back. Right? Policy. Suddenly, so open economic policy means you are free to do the business. Free to do the business. That means import and export. There's no restriction. There's no restrictions. You can use foreign exchange to import, open the LCs and other activities. But now, what happened? Now what happened? We have that particular market. There's a restrictions on import and export, right? Restrictions. And accordingly, right, import and exports are moving down. Your financing of the vehicles are totally collapsed. Right? Import of that. And certain items. You know that in those days people are shouting for the sanitary wares. Huh? Bathroom fittings. Those are the big business. And some consumer export also, import also. Consumer export, import and export. Right? You are losing your import money. Right, likewise. Right? So market risk management. Now you had a potential market at that time, but suddenly the market collapsed. Or otherwise, there are limited operation of the particular market. Because of that, your profitability, your profitability become very low. Your operations become very low. Then the operational risk management, how to operate in institutions as well as the market segment. So, licensed bank, according to section 2 and 36A to 36D of the Banking Act, banking business can be carried out only under the authority of the license issued by the Monetary Board with the approval of the Minister of Finance. That's what I mentioned earlier, right? That's what I mentioned earlier. So licensed banks, the applicant upon complying with the conditions specified request to CBS to issue the license. Monetary Board being satisfied that the license may be issued to the applicant, issue a license with the approval of the Minister of Finance, right? The such licensed bank should commence business within 9 months of the issue of the banking license. If they are delayed, they have to go for the new license. Right, under the corporate governance, there are a few things to be discussed on that. Board responsibility, disclosure requirement, related party transactions, board appointed committees, fitness and propriety of directors, and board compositions. But now, my dear, I'm not going to discuss these corporate governance practices now. Earlier, I have a complete lesson on that, but this time corporate governance will be conducted by another 2 lecturers. So I just want to skip this session this time. Right. So integrated risk management framework, back in a direction number 7 of 2011, integrated risk management framework of licensed bank. Integrated risk management framework. So that means, that what are the risks we discussed earlier, they have integrated into the one formula, and they have to have one framework to find out the solution for that one. We call it as IRM. Framework cover the various potential risks, possible sources for such risks, mechanism of management of information and reporting to the identity of and monitor such risks, effective measures to control and mitigate the risk at prudent level, and relevant license and committee responsible for them. That's not much, but this is one of the conditions by the banking and directions, in addition to the corporate governance. Yeah, credit risk management. Let me to check. We have to talk more on that. Shall we finish this one also? Can we wait for another half an hour? Are you tired or what? Hello? Right, okay, right. We will stop from here and we will discuss the latter part next week. Right, thank you very much.